Welcome back to the Learn to Trade channel. In this video, I want to give you guys a few tips on how to improve your trading. Now, these are not going to be tips on how to improve your entries, how to improve your exit. Well, kind of, but it's not going to be triggered focus in the sense that I'm not going to talk about where to take your trades, where to take your exits, your entries, stop losses, etc. These are going to be tips that I personally use to improve my profitability, right? But before we go any further, if you like what we put out, why don't you give us a thumbs up and why don't you also subscribe to the channel because we do put out content every single day, right? The first thing you need to do is number one, tip number one, focus on the higher time frames, right, for your analysis. And the reason is because you want to get rid of the noise, right? You don't want to do analysis on noisy markets in the sense that you don't want to do analysis in choppy, noisy markets. You want to get rid of all these zones. This is a 30-minute chart on the Euro US dollar, right? And as you can see, if we go back in historic price action, you are going to encounter zones where there is absolutely nothing to see because it's all chop, right? But if you go to the higher time frames, let's go to the 2 hour chart, and if we go back to present price action, well, you still get these zones, right? But the zones of support and resistance are much, much cleaner right here. So by going to the higher time frames to do your analysis, you are going to improve your overall profitability because you are going to be taking less trades because the zones where you are supposed to be taking trades are cleaner, right? So that's tip number one. Do your analysis in the higher time frames. Now, tip number two, only use support and resistance levels based on historic price action. What do I mean by that? Right? Even if you are looking at the higher time frames, you can start looking at levels of support and resistance all over the place. That is not a good way to analyze the markets, right? Because you are going to end up with a chart looking like this, right? And where are you going to be taking a trade when you have three levels of support and resistance in a in a 45 pip range? This doesn't work, right? This is going to confuse you, and this is going to make you enter the market and get stop loss a lot more. So what do I mean when I say that you only need to focus on historic price action or levels of support and resistance based on historic price action? I mean that when you are watching price action at a current level, let's call this level that we are looking at right now, you have to go to back in historic price action and look if in fact this level has been tested and retested at least three times or twice. Well, I do three personally. I do three times, at least three times before making any decision, right? The way that I do it, for example, let's imagine that we are looking at price action right here, and why don't we do? I go ahead and do the all replay feature on TradingView, right? Um, right here. So we are looking at price action at this level. We know that we want to be short the euro US dollar, but where are we going to short the euro US dollar? We are going to go back in historic price action and look for that level that is about to be tested. And there you go. So we have this level being tested and rejected once right here. You can see the greatest rejection at this 2 hour candle, and then you can see that we have this rejection. So this level not only was tested and rejected as resistance, but when we broke to the upside, it was tested and rejected as support. Then we had another rejection candle right here. This level has been rejected already 3 times, even if price already broke with it to the upside and to the downside, right? When we broke to the upside, we retested it as support, and now that we have broken to the downside, we might retest it as resistance, and this is the level that we should be looking for short. And as you can see, this is the level that was tested and retested as shorts. Remember that levels of, that's tip number 2. Use historic price action levels or levels that have been confirmed historically as levels of support and resistance. Do not use immediate levels of support and resistance. Having said that, immediate levels of support and resistance can be and will be most of the times levels that have been tested and retested in historic price action, right? Also, remember that levels are not straight lines on your chart. Levels are levels, so be careful when drawing levels. And make that tip number 3. Make that tip number 3. Use the bottom of the wicks to draw your levels. Why? Most of the time, people are going to use the bottom of the body of the candle to draw their levels. But the thing about that is that we do have those moves to the downside. That, I mean, when you use the bottom of the bodies, in this case, the bottom of the bodies, because we are talking about a level of support. We are leaving out a big piece of information, which is that in this case, sellers push price all the way down here, but here is where buyers started to jump in. So utilize the wicks on your levels. That is tip number 2. Tip number 3, big tip. You need to use volume in your trading. When I say volume, I'm not talking about the little indicator at the bottom of your chart that tells you how big the volume was on any given candle. I'm talking about the volume profile. I'm going to tell you the reason why this is important but first of all, there you go. This is the volume profile for the Euro US dollar. Now, very quickly, oops, I'm sorry about that. Let me just go ahead and use this one right here. This is going to be just fine. This is the volume profile on this piece of price action on the Euro US dollar. The reason why volume profile is important is because of this histogram. What this histogram is telling you is that at these levels right here is where the most volume was traded historically, at least on this piece of historic price action. So, and this line that you see right here, this gray line where price has bounced from, right, is called the point of control. The point of control is the exact level where the most volume was traded. You can see that is at the point of the histogram. And what this means is that normally this is where big buy and sell orders are going to be placed in the future. So, and not only that, but this acts as a magnet. So if you are looking to short the Euro US dollar, for example, and you were looking at historic price action here, you would wait for price to hit and reject that point of control. Or if you are looking at price action here, you are going to wait for price to break with that point of control if you want to go short. Why? Because if you're looking at price action right here, this is where big sell orders are going to be placed, and if buyers are not strong enough to swipe all the sell orders, sellers are going to take control of the market. And in this case, sellers have to be strong enough to swipe all the buy orders that are placed around this level in order for them to take control of the market. So volume is extremely important when it comes to making trading decisions. That's tip number 3. Tip number 4, do not use A lot of indicators. In my case, I don't use any indicator at all. Why? Because I think that the point, volume profile is an indicator. I don't use indicators because I think, this is true, indicators lack. The only indicator that does not lack is price action itself. I can get all the information that I need from candles and from reading candles and from finding out where these big zones are placed at in historic price action, and I will use this information to trade. Now let's look at a moving average, right? Moving averages lack. Let's say, I don't know, I've never traded with moving average, but let's say we're looking at the 21 period moving average, right? Where are you going to take trading decisions? For example, right here at that same, remember, this was the volume point of control. If you want to take a short opportunity with the 21 simple moving average, you are going to have to wait for this. And at this moment in time is where we got that pullback. So signals with indicators are not reliable. Learn how to read price action and utilize that information in the future to make the best trading decisions. Tip number 5 and final tip: be patient. Be patient for price to hit your levels before acting on that setup. Why? Because if you are not patient enough and you start trading smaller, let's say smaller here or smaller here, until we hit that level, that those are called fillers. Filler, very small positions, but these very much small positions that are most likely going to be losses, going to add up, right? Make less trades because less is more, right? For example, I only traded twice last week, and I have been trading less and less, and that has increased my win ratio, thus has increased my overall win rate, right? So those are the 5 tips that I can give you right now that will improve your trading making decisions, or I'm sorry, your your decision making process. I'm sorry, and I hope you liked it. If you did, give us a thumbs up on the bottom of the video. Subscribe to the channel and comment on what you want us to put out on the next video. Thank you.